Derivatives trading involves substantial risk of loss and is not suitable for all investors. Past performance is not necessarily indicative of future results.
So stressful. When the world's on fire. Good God. I can't look at this, guys. Like, my strategy is you buy it and you hope that you got a good spot. Yeah, but we all think you're crazy. You don't fight this. No way. The markets are freaking out and you don't think that anything is wrong? Come back tomorrow and I'll lose it all. Should be fun. Good morning, everybody. It is the 30th last day of the month. Incredibly dull week so far, but I think we have reason to believe that we should see some interesting stuff today. And then we got Thursday and Friday, and of course non-farms on Friday. So big day. Let's go to the charts. So yesterday in the E-mini, relatively quiet day, but we did sell into the close somewhat, so we came down a little bit. Now in the overnight action, there was a little bit of a drop, but it's just into the previous day's range, so nothing too big. We did see a little bit of a decline in yields here. You can see the treasuries moving up, but already here in the open session, or rather the pit session of this, they're starting to push down. So we'll see how much of that gives off, but that kind of was hurting some of the banks and so forth. And then when we come over to some of the other assets, oil doing well here, still OPEC looming. Gold and silver just continuing to have trouble. Oh, gold actually took a little bit of a hit yesterday. I did not notice, but silver may be recovering it. So I did see a report from, I think it was JP Morgan, them thinking that gold was going to be more in the 1600 area, which is like, ugh. But the market doesn't seem so hot on gold these days. So, I was into the gold trade. We got a little bit on it, so I'm not going to say that it was like a dead wrong trade, but it was like the thing happened that we were looking to happen. We didn't get that much out of it, and then it just completely collapsed. So, I don't know. Could gold come back? Well, we're seeing a lot of things that suggest that the housing index component of CPI is going to come up. So we shall see. But then when we've had big CPI readings, it didn't necessarily help gold and silver. So copper doing okay. And you see the dollar here. Yesterday, pretty high, came back during the regular session, but the dollar is still doing relatively well. So it's kind of interesting. One of the things that I find super interesting, just I keep an eye on and I see it on, because everybody's always complaining about the dollar and inflation, right? Then they're saying like the dollar's getting weaker, and yada yada. But like actually, yeah, the dollar has come down over the past year, but that was because it was like unusually high, and since then it hasn't really been all that extreme. So I remember when Goldman said, they were going neutral on the dollar, and then the dollar took another big leg down, but then after that it's been pretty good, and it just kind of reverted back. So its demise vastly over exaggerated. I am super late. ADP, by the way, today was 629K versus 600. And we didn't really have any 6:30 news. But what we do have today is Chicago PMI after the open and pending home sales. Oh, there's also New York Fed Treasury purchases at 8:30. That's something that might matter. Trying to think, was there anything else going on? I don't know. There's all sorts of interesting news stories, but nothing like drastically important to markets so far. I'm gonna make sure I've got my streaming, my news squawk set up correctly in there. And good morning, Winston. Are the robots ready? Yeah, let's turn them on. What was it? Was it yesterday? Yeah, they did not do so well past 2 days, actually. So J2, like during our time period, he continues to just take like one trade. But then if I leave him open, he'll take a bunch more. And it's like black or white. It either does really well or really poorly. Where and how did you set your Google Chrome page? It's really cool / organized. This? I didn't do any of that. I don't use Google Chrome. I use Brave. So the engineer, there was an engineer that was over Mozilla, and he was a pretty significant guy over at Mozilla, and he got canceled. How did he get canceled? I think it was because he had donated to the campaign against gay marriage in California or something like that. So they kicked him out. Which I think is just abhorrent, but I digress. So he went off and he started his own thing, and he made his own browser that's based on Chromium, but is privacy focused, called Brave. And here you get these Brave shields. So if I come over to like say Zero Hedge, then I look at the shields and it tells me like, oh, okay, there was 9 trackers and ads that Brave blocked. And it tells you all this other stuff about it, and you can enable or disable it. It also has this cryptocurrency stuff built into it, Brave Rewards. So yeah, it's a great web browser. I would highly recommend it. Okay, so do have the robot turned on. And what else? Should be interesting because I think tomorrow my rhythmic data should turn off. So that'll be it. Oh, you know what I should do though is well, when I look at the overnight, I'm still not seeing my gap indicator. Did something happen? Is it like not on there? No, it's on there. I haven't seen it happen in a long time, and I'm wondering if that is. I'm starting to wonder if there's a difference between CQG and Rhythmic in those respects. How would I go about testing that? Well, I could... oh, did I turn off my Rhythmic? Is it not even on there anymore? Yeah, I deleted it. That's funny. I don't know. Maybe that idea is a bust. Or maybe it's just not happening. Well, I have to do it after stream, but I think what I need to do is I need to reconnect NinjaTrader to the rhythmic data again and run a little test and see. Oh, except for that I wouldn't be able I wouldn't be able to do it because I have it with my other license on. Oh, that's frustrating. I don't know. Theoretically it could still happen. I don't know. It's really weird. I have a hard time seeing why it would do it on Rhythmic and not CQG. It's probably the case that it's just hasn't been happening lately. Probably that's what's the reality is, but I don't know. We'll see. Let's just make sure you got everything over here. Discord all up and. Somebody was asking me that they don't see the live streams anymore, and they're like, where are they? And I'm like, yeah, I'm putting them on playlist and unlisting them rather than having every video public to see what happens. And actually, let's go and see if we can see a difference. We should see if there's a difference, eh? I can say that the channel overall has definitely slowed down over the summer. I can still see the volume from that aberration. That doesn't help. So. See this one, it's like this still gets video. I don't know. Maybe it is a bad idea. Or maybe what I should do is like unlist them at the end of the week or something like that. I don't know. The question is how much viewership was I actually getting from people that like a video was recommended and then they sat and they watched it, because that's the thing that I'm trying to avoid. People that like regularly watch the channel, you should be able to just go and find the playlist and do it that way. So should be fine. But like there's that extra little bit of, friction to getting to it that could like decrease overall views. But because I have this huge aberration, it's impossible for me. Oh, actually, no, wait, I can do this. I can just look at it views by day. 813. Oh, that's too hard to see. We'll have to see today how many views we get in the day today. Well, the treasuries kind of bounced a little bit there, but they look a little heavy to me today, which it would be a little bit unusual to see the treasuries push down substantially on the last day of the month. Yeah. In marketing, consistency is important. If we're just emerging from COVID, it's summer, and if people are offline and then return, you want to have maintained consistent. Yeah, I don't know. Well, do you understand like what the issue that I'm looking at here? So the contention is this. So YouTube supposedly looks at every video in isolation as to whether or not it should recommend it to people and so on and so forth, right? So, but what they also do is every time that you release a new video, my subscribers have a certain chance of it being recommended to them on their front page. And if they don't click that link, then it's less likely to recommend it to them, right? So what happens is, because a lot of viewers get the daily videos and they aren't interested in watching the daily videos, but they are interested in watching the prepared videos, then they're less likely to get the notifications out about the prepared videos. And then the prepared videos are less likely to take off because they don't have the... Does it make sense? The prepared videos are less likely to take off because they don't get as many of the subscribers recommended it to them, right? So the idea is you unlist your live streams after the fact, because not a lot of people watch them after the fact, and then you just put them in a playlist so that if people do want to watch them, they can still do so. It's just not recommended to people by the YouTube algorithm. So that's the theory behind it. We'll see how it works. I think we'll do it for like a month or so, and we'll see how the views are different. So your problem becomes finding the feed algo that keeps you up front, right? Well, yeah, like the theory is that my videos should get recommended by YouTube more using this method. So the most popular channels that I see, they do this. So, I mean, there's got to be a reason for it, right? And that's where I'm saying how, when you come back and you look at the old videos, like if we come back and we look at a video from like last week, for instance, Bitcoin reaches 30K downside. Okay. And I received, since it was published, 40 views. And of those 40 views, well, it doesn't say, of the overall number of views, they were the majority of them were returning viewers. Oh, okay. So let's see here. Published the day that it was published, 121 returning viewers, 4 new viewers. Returning viewers, like, I think that the vast majority of them that watch the live streams are subscribers. So you get what I mean? Like, probably the number of views that I'm losing from not listing the live streams afterwards is very minimal, because you guys are going to go and find it in the playlist anyways. But the number of views or impressions that I may be missing out on because it recommends the wrong video might be substantial, right? Like, that could have been the difference between a video going viral or not, or something like that. So that's why I'm doing it. But did your video with actually it did. Actually, which day was that? That was like last Friday. Yeah, the 24th. Now, 26 views since it's been published. There was a lot of views that day on the stream, though. But you get what I mean? Like, it used to be. How do I put this? Earlier on in the channel, there was a lot more after the fact views. I think there was a lot more people that were watching it to read through the order flow. And I guess as I've kind of changed to not focus as much on saying play by play what's going on in the order flow, that's probably why that's decreased. Yeah, once it's with that sort of title, you would grab people who love test puzzles and logic games. Yeah, but that's where it's like... See, I think what will happen is, like, the probability of somebody getting a recommendation because it was puzzles and logic games, I think is pretty low compared to the number of people that are just into day trading and get recommended the video because it's day trading. You know what I mean? And if somebody is interested in day trading, I would rather them get the, in a recommended video tab, I would rather it recommend them the how to maintain your trading strategies video than I would the latest live stream. But like I said, the thing is we can change it back, right? It's not hard to change it back. So I can do this for a month, maybe 2 months, compare the numbers, see what happens today. So I just show you something else, is that this one video, the maintaining algorithmic trading strategies. Remember how I was saying that like it was getting a lot more views than normal, and I was like, well, maybe that's organic. Like, got 1.3k impressions and a pretty good impression click-through rate, right? And it looks like it's coming from suggested viewers. But then now that I can see the suggested videos, then look at this. All of these videos that it's being recommended from are videos that are like in foreign countries, foreign languages, and have nothing to do with trading. And there's like views, like I got 1,434 views and only 108 impressions. So it's getting, people are clicking on a recommended video, but there's not actually impressions. You get what I mean? Like, how is that? So I think that probably the bulk of this video's performance was also from whatever hacking was going on, which is unfortunate because I would like the videos to just, be successful organically, right? "18-minute mistakes YouTubers make." Who's that one? I bet you it's a channel that I've watched. Oh, that's a new one. Jevin Dovier. Variety content, feeling entitled, blah 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 blah. Let's see. No. Impressions means that the video was recommended to somebody. So what you want to see is, you're right, so it could, oh geez, that page is bad. We'll just kill it. So impression means that it was showed to somebody, and then of those impressions, a certain number of users click on it, and that's the click-through rate. And then once they're on the page and they watch the video, there's the percentage of the video that was watched, right? And so if your video has a high click-through rate, because it has a good title and a good, it's a subject that they're interested in, and you have a good thumbnail and title for it, then you'll get a high click-through rate. So if you're getting like into the 10% click-through rate, then that's where YouTube will really start recommending it, and then the percentage of the video watched is another factor. So high click-through rate and a high percentage of the video watched results in the algorithm deciding to recommend it more, and therefore more impressions. So impressions is basically the measure of how well we are doing at selling our channel through the YouTube algorithm, right? So if our experiment is successful, then what I should see is on Thursday, the number of impressions that the channel gets should be higher than it was on last week, for instance. Or even today. We could even say today. I was going to say yesterday it looked like we did get a good number of impressions, but I don't know where that was coming from. That could have been still a knockoff effect from the big data aberration. So we kind of have to let that kind of cool off in order to see what the difference is. How does YouTube know when someone shares it? Well, I don't think they do. Well, so you can go and you can see there's traffic sources. So you can see like if it was a recommended video from another video, you can see if it was recommended on their homepage or if they got it from their subscriptions. And you can see if they visited from another website, or you can see if they just entered the link in. Yeah, they say again and again, and the titles and thumbnails are super important. Yes, it is. Yes, it is. I probably need to switch up my thumbnails a little bit. I was kind of thinking, because I would very much like to get back into a video every week instead of like a video every other week. But I'm not sure if I can actually keep up that pace. But there's a couple of smaller videos that I've kind of been putting off doing because there was more important stuff. What do you think? What would you guys rather hear about? Or do you think would be more useful to people? So there are two videos that are actually there's three videos that are kind of bigger projects because it's going to require multiple viewing angles and, editing and things like that. One would be on your daily routine. One is on achieving day trading nirvana. And the other one is about how the biggest lie in trading is that the way to success in trading is from following other people. So those are the three that, and yeah, I kind of need to do. Like I was thinking the day trade nirvana one next. But then I also have is day trading for you? Or how much do you need to day trade? A video focused on how do you get around the PDT rule? And a video on identifying scams. So those are all ones that I could record in one weekend and it would be done and it would be fine. And I think that those would be pretty well targeted towards the algorithm, Oh. Ethos, logos, pathos. Yeah, I had that. I had where did I put that? I kind of had a strategy written out for like a rotation between a video that was like 1 week would be a video that was more advice oriented. 1 week would be a video that is more current events oriented, and 1 week would be more funny. But I've never really gotten into the funny videos. I just haven't had success with that. The baby is adorable. It seems to me that Asher is more adorable than the average child for some reason. Are we getting some flattening coming into the market? Because it looks like that ZB is getting spiked back up, bounced back up pretty high. It's a good 2 ticks higher than the 30-year. Or, sorry, the 30 is about 2 ticks higher than the 10. But then the 10 and the 5 are pretty much in line. I feel like there was something else I was about to go into, but then I didn't. Oh, see, Fernando says the same too. The last 2 days, I don't see your live stream video when I log into YouTube. So do you not see this video? I see it. It might have been possible that I didn't have the settings right and that yesterday you wouldn't have seen it. Well, that's weird. How come that doesn't show live? That should say that it's live, right? Live now. When I search for me, it should say live now. Started streaming. Maybe YouTube just doesn't say anything about that on the... That's kind of interesting. Weird. But I might have had the privacy set to private yesterday and not realized it. We'll see. I bet you a lot of people will like comment and stuff. I bet you. In fact, let's come do it. Do I have any unread? No, I don't. In our personality topology, a young man who just had a baby has already typed his son. He has decided his baby CS is an INTJ. E-mini seeing some bearish pressure there. Let's see here. Fed unity cracks as inflation rises and official debate future, says the New York Times. Central bankers are increasingly divided over how to think about and respond to emerging risks after months of rising asset values and faster than expected price increases. I wonder if we come over here to Forex Factory, and if we could just look at this month, July, and then CPI. Yeah, of course not. No estimates. Is there anything that gets estimated more than a week out? At least on this calendar, shows an estimate more than a week out. It looks like no. You can certainly see where the CPI has been higher. I'm thinking that it's going to be around spot 5 again. I'm thinking it's going to be around spot. It's kind of difficult because it's like inflation has been higher than the estimates, roughly speaking. I mean, there was one CPI where they vastly understated, and then there was another one where it was kind of close, but when you actually dove into the data, it was like not so big deal. And again, this like higher than expected increase has been mostly from cars. But I think that the issue has been like we expected there to be housing inflation from housing. I think it's going to come later than we anticipated. So then you kind of get this period of like a little bit of extended. And is that a big deal? And it kind of feels to me like the market is starting to come around to the idea that maybe that is a big deal. Okay, that was interesting. just as I see things kind of looking a little bearish, and frankly, like there's a head and shoulders pattern on kind of a freaky double topped head and shoulders pattern in the E-mini. And so it kind of looked like they were about to bust it. But then some of the other things that I'm seeing are kind of giving me contradictory signals and suggesting that they're gonna come up there. So I think I'm gonna take one from there, and I'm going to give it kind of a bit of room. More room than I've been giving them lately. Let's see what happens if they decide to break this neck or not. Well, I should note that it doesn't look like Jay took a trade. Though I think he might. It looked like an area where it was likely that he would have. Tommy is talking about some ideas. A complete trading plan, DNA of the instruments, different day types. I actually already have a video about DNA of the instruments. Different openings, drawdown, daily loss, trade performance. So I also have a bit of video on performance metrics. Some of those things, like having like a daily loss, I'm like, how would I make a video just about that? I don't know. Here's one thing that you will notice for my videos. Well, I shouldn't say that you will notice. Something that now that I've told you, you'll look back and you go, oh, but preferably you don't actually notice that it's happening. But I avoid saying anything that is objectively tactical or strategic unless I can empirically prove that it's a thing, right? So like the closest that I've ever gotten to making those kinds of statements is you're more likely to make money from market making a future when new money is coming into that market and that market is moving up. You could make a video titled, "How do I make a video just about that?" But that wouldn't get the keywords. But see, it's easy to make a video is day trading for you, right? That people will search for and see. And could have useful information in it, right? Trader routine. That's something that I think would catch, because the trading hardware video, in reality, we need to make more videos like the trading hardware video. Ones that are broadly applicable to all traders, essentially. And then, like I said, I have these three major videos that I think would take a while to make. And I don't know necessarily how they would do well on YouTube, to be honest with you. And after that batch of videos, I don't know, maybe by then we'll have like more ideas. But I'm thinking after that, my plan will be to move more into current event kind of stuff. Having a little bit of gas here, like burping today. So I am detecting an unusual amount of back and forth here between 42.77 and 42.78. What if you asked 20 people you know in real life, from teenagers to old people, if you wanted to begin day trading, what words would you use to search for how to begin day trading? Well, so let me show you something. Here's what we do. We'll come over into Brave browser and we open an incognito window. This is a private window so that it won't have any of like my search habits associated with it. So when we come in here into the search box and we start typing stuff, that'll tell us what people are searching for, right? Day trading for beginners. So the most common thing that people are searching for is day trading for beginners Robinhood. What a surprise. Right, so I made a video, stop wasting time with Robinhood and trade futures. Right? Worked a little bit. Day trading addict options, stocks, Bitcoin. Futures strategy, so this just gives me ideas of other keywords. So then I'm like, okay, strategy is one that I want to do. Automation, bots, hardware setup. And then you can just go in for A, go through it by A, B, C, D, right? And taxes. Okay, video on taxes would probably be a good idea, right? Explained. Gappers. So gappers would be a term that you could go for. H. Day trading halal. What? Is that something that somebody actually searches for? I. A J. Okay. Motivation. Okay, so there you go. There's one right there. Day trading motivation. M. Monitor setup. Traders who knows the buzzword Robinhood are not, well, all we know, all we know is that those are what people on YouTube overall are searching for, right? These are the keywords. These are the keywords that are going to give us the most hits. Quit job. Ouch. All right. Looks like that trade was bad. Tips, taxes. Oh, we should have one over here. Taxes. Taxes. Under 25K, huh? Yearly Ravet. Oh, yeah, that's right. I was like, didn't the I missed something, and you asked it again, the ugly dude. So thank you for asking again. Let's assume that robots manipulate the order book. Don't you think that orders are more honest near volatile times in volatile markets? So if we're talking about a reading of limit orders, I think that your read about when what you're seeing is reliable and when it's not is much more contextual. And it's very difficult for me to really put into words why that is. But for instance, I would be really surprised if 11.5 went offer and, with only 2,000 to trade. I'm going to bet you that almost all of that volume at 11.5, if not more than what's at 11.5. Okay, so 37. So it was about equal to what was on there, right? Well, that had only been 1,500, so they traded 2,000 to take it offer. Okay, right? Like, there are guys down here that do want the fill, and especially when you kind of get closer to these edges, you're like more likely to see these icebergs. So there's just kind of this whole thing about, like, sometimes they'll put a bunch of orders out on there and they're just trying to scare people, and then it pulls and it ends up being nothing. Sometimes they really do intend on buying it, but something short circuits them, right? Like the dollar moves and that screws the trade up or something like that, right? But during fast markets, I'm not sure that I can say that the orders that you get in the level 2. Okay, so there was 24. That was just what was on there already. But it ticked up again. All right. So do you see, like, right now, like, they're just trading what's on there. They're not necessarily pulling. So maybe that's just trying to make it look like what I said. I don't know, but I'm not seeing a situation where I'm, like, really suspicious of what I'm seeing on it, and I can't explain fully why. I just kind of know that, like, they're pushing down. These guys probably want fills, and whether they get the fills or not is probably irrelevant to whether or not they're able to continue pushing down or not. But when the market gets more volatile, I think that there's a bigger difference, and that is that when markets get more volatile, there is just more inefficiency. Okay, so you will notice that, like, the differences between the 10 and the 30 become more exaggerated during those times, for instance, right? Or the differences between the 10-year and the E-mini become more exaggerated when markets are getting volatile. And you'll get a lot of, a move that comes up and then comes back and so forth. So, like, if you have a really, really solid idea of what direction it should be going, during volatile times, you may have a better chance of actually getting your fill on backwash, because you'll end up getting this huge mess of volume that goes both ways, and it's just kind of a mess. So it's like there's more opportunity for you during volatile times just because it's moving more. And this kind of comes back to this, this thing that I was talking about in my last video about maintaining strategies with the Kyle model, right? So if there's a very high movement in price, then there's very high movement in volume, then there's more opportunity to trade more contracts, essentially. Because it takes too much time, so they can pull, spoof, and front run, and even humans can do that on ZN. And something like NQ, on the other hand, you get lambasted in the face. I don't know. I mean, I kind of get where you're going, but you're kind of diving into subjects that it's like you can kind of get a feel for, but I would have a very hard time being able to enumerate the factors that go into whether or not it's going to do something like that. And the bigger issue that I think you'll find is that you may be able to predict that there's going to be an iceberg in a certain location, or that there's going to be a pull in a certain location and how much volume is it going to take to trade it through and everything else like that. And then it not matter. You know what I mean? Okay, so for instance, there's a decent amount of volume absorbed at 11.5 and a decent amount of volume absorbed at 12 so far. So it's probably going to be at least 3, if not 4,000 to be able to take 12 bid. But look, like they've traded back up through those 2 ticks pretty quickly, despite the absorption. So like, how do you know that the market orders are going to overcome that? You know what I mean? And that's where I'm saying, like, order flow is really, really useful, but there's some really key limitations to it too. The order flow doesn't necessarily tell me that a bunch more market orders are going to come in. Maybe in some really narrow situations where it's really obvious to me that there's a stop run building at a certain area, but you know, this is just kind of, there's a lot of really iffy situations. And what will often happen to you when you're trading pure order flow is you'll come in and you'll say, look, they're absorbing at 12, and I bet you they're going to absorb even more, and the book is turned around there. So I want to have my limit offer there, and if they hit me, it will go down. They won't go far past me. It'll go down, right? And then what happens? They trade 3,700 contracts out of nowhere, and it ticks right through you. You know what I mean? But that's ZN too many limits versus the markets. I kind of get the impression that you're stuck on this idea that it would be, you're trying to prove to yourself that it would be easier to trade in a thin market is what I think is what you're trying to convince of, right? And it just doesn't work that way, right? So in terms of like thick versus thin, Downey says no. Oh. Yeah, Tommy, there you go. The best way to tape read is around high volume nodes and low volume nodes in context. Yeah, in fact, I'm way more interested in low volume areas, right? Easier to determining whether you're right in a shorter amount of time in thin markets. That might be true. I don't know. So like the thing in the 10-year, and the reason why I like a thick market is because you've got a lot more data and it moves a lot more slowly. So in order for it to move, there really has to be like a reason for it most of the time, unless you're just talking about like one tick, right? But like if I come into the 10-year and I put like 4 ticks risk reward, then and I'm winning, like that means that I actually caught something. Like it's not just noise. And you'll usually get a pretty clear picture from the cumulative delta and everything else about which way it's going to go. Absorptions can't predict direction. They stop price in milliseconds as long as there are no markets to pierce them, though. Well, yeah. So make no mistake, market orders are much more predictive of which way price is going to go. Okay. Like if you look at cumulative delta or the current trajectory of cumulative delta is a very effective indication of what direction we're going to go. It's not 100%. It's if you just trade it off of cumulative delta, you maybe get a little bit over break even. Okay. But market orders determine which way we go, much more than absorption does. Now, I'd also say that market orders are less predictive in the like the 10-year treasury market than they are like ES or probably even better yet, oil. Oil is probably an even better example because there's a lot of weird things that go on in the E-mini sometimes. But because the 10-year is so thick, informed traders are much more likely to use limit orders in this market than they are compared to other markets. Of course, I think that I would tend to say, or I believe, I don't know, there's no real way to prove this, but this is a general thinking among researchers, and it's one that I share, is that informed traders tend to prefer to use market orders, or maybe they don't prefer, but they just are more likely to use market orders, often because they're trading off of breaking news, and so they're more concerned about getting in the trade now before the inefficiency is gone, right? But because the 10-year is kind of slow, you're going to get more people willing to risk it out and you do informed trading with a limit order, right? Delta is effective but hard to time, yeah. But I mean, so let me back up. So why is cumulative delta an effective indication of what direction price is going to go? Because ultimately, in order for price to move, market orders have to overwhelm limit orders. And most of the time, that is what happens, is the market orders overwhelm the limit orders, right? It's only in very specific situations where the limit orders win and price reverses. Okay, but most of the time, price is moving, it's because market orders are overwhelming limit orders. So when you're getting a strong flow of market orders in a direction, it suggests that that there's informed trading and that we're going to go that direction. Like overall, maybe it's more like a 55% chance, but overall it's more indicative of what direction you go, right? So that's your first thing. But then here's their next question is like, okay, when you have a lot of volume trade in a certain location, what does that mean? Well, it could mean a bunch of different things. Like, I suppose it kind of depends on how it turns out, right? For instance, what we saw here at 11.5, well, we touched that twice. We touched that twice, but quite a bit of volume traded there, didn't they? It's been down there for a long time. So I'm going to go out on a limb and say that I think that the trade that happened at 11.5 was kind of more the order book reaching its limit and people wanting to trade and just trading in that location rather than it being a location that people really wanted to trade. Now, on the other hand, if I get like a really strong move in delta, like there's really aggressive selling in that location and that area is very responsive, that is like they're putting up limit orders very readily, they're hitting back with market orders right away, that's kind of more like responsive buying. Okay, so somebody really wants to buy it there. But if a lot of volume is trading, that means that somebody wanted to sell it there too. So I avoid those areas because to me that's like, okay, there's two forces going on here and they seem to disagree with each other and they both appear to be pretty big. I don't know who's going to win that battle. I want to avoid it, right? And then at that point, it's much more interesting to me, an area where they just slide right through it on almost no volume, right? Why is Warrior Trading making more money on stocks more volatile than NQ with the skills of a 9-year-old girl? Probably because he has a bunch of people following in behind him and he just takes his profits off of them. That's the prevailing theory out there, at least. You gotta understand, though, that the edges that you can pick up in stocks are often completely different from the ones that you can pick up in treasuries, right? Because in treasuries, the spread is always 1. The spread is basically always 1. Whereas in equities, there's this big spread that you can pick up all the time. He says, ouch. I mean, I don't mean it to be like a knock on him or anything. So the one thing that I can say about him is that he does appear genuine in that he is really trading and he has really made some money. But what he's doing is probably not duplicatable for the vast majority of people. Is all I'm meant to mean by that. I wouldn't look at that and say, so the way to trade is to take advantage of high float stocks and yada 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 yada. Okay, so Jay took a trade off of just before the open there, which is actually a slightly unusual, and it really worked out for him. I'm just going to throw that out there back again. And here's the thing is that if you are in like that thin market, okay, then that means that it requires a lot less volume for it to move against you, right? If there was informed trade, essentially, if you're market making in that market and there's informed trading, like there's a lot more risk to you in that thin market, right? Whereas in the thick market, there's not very much risk against you at all. Like you can get away with these volume stops where you don't even give out the stop until it's like just about to leave your price. You can't get away with that necessarily on other instruments. Man, the treasuries came back with a vengeance, right? This is like a perfect example of what I was talking about. It was like, okay, they absorbed 5,000 at 12. Does that mean that they're going to stop? No. I mean, how do we know if more market orders are going to come in or not? And it looks like in this case that there was a lot of pulling against it as well. And no way for me to know that that's what was going to happen. Like in some cases you can't predict it, but I didn't know that that's what was going to happen. Well, it is a pretty good open. Let's see here. How much was it in cumulative delta? Okay, so about 2,000 contracts, maybe 2,500 contracts on the open buying. And then they very quickly came back to the open. They're testing the open. I don't know if they're going to turn bearish here or not. But that volume didn't all come off. So it wouldn't surprise me to see like another move up, but like on the month end, they tend to buy. I don't know. Seems like it came through there very quickly. There must have been more. Well, there was some movement in the 6J as that happened, so that might have been a driver. Barler refused Trump demand to ban his critics. That one sounds like too good to check. And overall, it looks like the dollar is still strengthening, actually. I mean, I suppose since the open, since things kind of turned a little bullish, it has been coming back down. Okay, so the 10-year has kind of found an area that there's more volume interested in it, at least. It's kind of been stuck at that price. There's the E-mini. Oh, why did because these are the different, I don't know. I don't know why I did that, to be honest. Oh, you know why? Because this one isn't resetting at the same time, that's why. So they came up into like opening values are in the 83 area. So they kind of came up into that and, you know, cooled off a little bit for a second. USDA reported noon food stocks are down. No one is eating anymore. Oh, jeez. Okay. That was a good break of the highs now. This could maybe just trend. So I guess the thing that I was seeing there in the E-mini was, I think that I was seeing something real, and I maybe took it a little early on that first one. When I'm sitting here wondering if the treasuries are going to turn back down from here or if they're going to push higher and it's going to turn into a real trend up. Forex Live says major indexes open up mixed. Well, we've got the number here in 15 minutes, so. Oh, this is the one that gets released early. So really, we've got more like 3 minutes. And what are we looking for? Chicago PMI with a forecast of 70 and a previous reading of 75.2. Okay. So Rice kind of slowed down here in the E-mini, but still a lot of volume coming through it. The Treasury is thinning out a little bit here. So it looks to me like they're maybe starting to prepare for the Chicago PMI. Remember, that number comes out early. Comes out, I think, 3 minutes early. Three minutes before the public release time listed on the calendar. Yep. So in 1 minute, okay. So here's where we would see the news. I'm not seeing any direct like spikes or anything like that. Hi, are you using Jigsaw Trading? I am. I use Jigsaw as my DOM. I'm using NinjaTrader as my chart still, but I use Jigsaw for the DOM.
Winston's mom says traders, if you haven't hit the like button yet, please take a quick second to hit the like button. Thanks, this helps the channel numbers and also makes speculators smile. LOL.
Thanks, Win. So I didn't see like a super clear volume spike or anything like that at 42. Of course, not everybody gets the number, so you usually still tend to see a reaction when the larger number gets released to everybody. But just based off of that, kind of suggests that we're likely to see that number come in close to in line. Let's see here. You're based in the UK, but trade US level 2 quotes using Lightspeed. What futures broker? Well, so I'm on NinjaTrader brokerage right now. Was on AMP. I moved over to NinjaTrader brokerage so I could use NinjaTrader. I also really like Edge Clear. Are one of my favorites. I don't know. The broker that you use, I think in most cases ends up being not really a huge deal. Unless, like, it's one of those things that doesn't matter until it matters. But which broker you choose is going to have a lot to do with which software you want to use, right? So if you want to use only Jigsaw, which is very doable now with their charts in a pretty good spot, and something that you're not doing something funky like I do, then you can pretty much go wherever you want, right? And then it's basically like who has the best commissions. Yeah, am I just not getting financial juice here today? What's the deal? They should be saying stuff. Oh, okay. So it was lower than expected. So maybe that's why the treasuries are pushing up here. Yeah. I suppose the E-mini is like, doesn't necessarily care because maybe, less inflation. That's good in some respects, right? With the price that we're at now, though, one has to wonder how much more upside there can potentially be. There was still that FOMC day where we went up to 132.30. That's like way up there, though. But there's not much between here and there. I can use CME to look for regulated brokers. You could. The ugly dude says, "Isn't that low impact?" I would say, well, I wouldn't consider that number low impact. It's a fairly important number, especially now, and it depends on the instrument. I think that it tends to be a little bit more useful for treasuries than it does equity markets, but. Contextually speaking, it is pretty important just because there's like, that's all they got to work with right now, Yeah, like when you go over to Forex Factory and you see the impact numbers, I mean, those are useful, but you kind of need to understand them more than that. You kind of have to look at what does this measure and what are the big questions in the economy right now, right? Because when you go and you look at it, it would probably call CPI a medium impact. Would probably call CPI medium impact, I'm guessing. Let's see. Let's go look. When is that? Oh, actually, it says that it's high impact. High impact expected. But it's like right now, it's super, super important, right? Ooh, look at that. Look at that. So in the 10-year, they're stepping up to 15.5. Pretty big offer at 16. Some big stacking at 15 as well. I don't know if what we're seeing right now is really a play that they won't have to increase interest rates as much. It could be, though, because the number was lower than expected. That, we should expect us to move up, right? But I think you also got like the month-end flows going, which tend to be long. So could be that. Okay, so when we traded down from 15.5, they left a big take profit at 15.5 as well. Is it okay if I don't trade every day? That's probably a good thing, especially in the summer. You're going to be tempted to trade every day, but the reality is that retail traders don't necessarily get good opportunities every day. If it's like like yesterday, I'm going to say that yesterday, if you didn't take any trades yesterday, that was a good thing, because yesterday was a crap market. Well, it looks like at the moment on a relative volume basis that the 10-year and golds have way more volume in them compared to anything else, relatively speaking. Now, I find that one in gold really interesting because when you look at the instrument itself, it hasn't moved all that much. So I think there could be an inefficiency there, yeah? If we're making a play saying that we think the interest rates are going to decrease because the Chicago number was bad again, then I think the call is going to be gold should go a little bit higher. Let's see. Let's wait, because the treasury's moved pretty good, but gold hasn't really broken out yet, even though it volume-wise says that things are hot. Can we get a competition with you to get a free combine? What? I'm probably not. To be honest with you, like, I'm totally interested in like making videos about combines and informing people about them and everything, but I'm not interested in just straight promoting them. You know what I mean? Like, if they get a little bit of promotion off of educating the audience, then that's one thing, but I don't want to do activities that are purely intended to promote them. Okay, so the E-mini was pushing up there a couple of times, had a couple of good drives, but then fell a little bit. It may just be a temporary setback, but they did fall. Whoa, okay. Now that is interesting. So, okay, yeah, so now their full report is out. The 6J just got smacked down super hard, and the treasuries came back to where they were. That's curious, that move in the 6J, and it popped up on the top of my market analyzer as high relative volume. I'm wondering if this AMA relative volume is by day of week on 1 minute data. You know, we need to pull up a chart with this on it, because I'm not sure if I really completely understand how it works on a 1 minute bars. You know. And well, we'll just click OK. And then indicators, lizard, relative volume, reference period. Oh, by day of week. High volume threshold, low volume threshold. We'll just do reference period in weeks 8. So I don't think that it's telling me cumulative volume for the day. I think it's telling me for that particular minute, is it unusual volume? Is it bad manners if someone calls his wife a stu? Yeah, that would be. Darn. Okay, wait. Yeah, I'm going to take that one off because it was a loss. I was trying to, like average in a position here. I don't know. The original trade actually was good. I probably should have taken the 2 ticks on it, but I suppose I could try this if it comes in again. Oh, maybe I'm misinterpreting this. This is like a high volume period. That means that it was good, but then maybe things evened back out again. I didn't like the way that I got filled on that one at all. Well, either way, I do kind of like that it's showing me like what's moving. So well, all right, so I'm gonna have to get out of this one for now. Coming back down on NQ. Yeah, I don't know. They could still recover this. I don't know. I think that they're just kind of ranging before this pending home sales is about to come out, right? So pending home sales, we're looking for an estimate negative 1%. Oh, okay. Wait, did I hear that right? 8% versus an expected negative spot 1. I kind of got a little excited there and clicked into something when I shouldn't have, but it's okay. I scratched it. Now I'm looking at the treasuries and I'm surprised that they're not moving. I'm seeing some volume coming in here to the E-mini too. Huh. That is really weird. So I do need to do that. That is a little odd. The market doesn't seem to know what to do with that one. I kind of suspect that some of these larger stacks on the DOM here are a little suspect. Like if we were to immediately tick down 2,500 contracts to take 14 offer, I don't think that there would still be 6,000 sitting there at 13.5. At least 2,000 would pull. Doesn't look like the sell demand is there though. So you're getting a little bit of flattening here, and so even though the 5 years kind of pushing down a little bit, there's like some good demand in the 10 and the 30, and it's not going well for me. And the 6Js is still pointed down though. And the E-mini just kind of seemingly going nowhere. Absorption at 14.5, huh? Doesn't look good. And then it did go offer. 48.11 to do it too. But it might not take much for it to tick back up again. It's trying. Not that time, I guess. Well, I don't know. I want to say that the Yemeni is being kind of dull again, but there's actually a good amount of activity happening over there. It's just not moving. Okay, your trader's going to trade, Mike. Thank you for reminding me, Win. Here you go. In the video description below, you can get your mugs. Well, so now they're trading up into 14.5 again, and there's a 4K iceberg the other way, right? Seems like there are sellers in this area, but you notice the little notch in the profile there at 13.5? Ooh, how many is it going to trade there? 778. And then it goes offer again. Trading Floor Audio tweets, outgoing Bank of England chief economist Haldane says the UK is at a dangerous moment as inflation heads to 4%, reports Bloomberg. The Bank of England's chief economist urges action in a final speech. Thinking on inflation at central banks is starting to shift. Okay. So this is curious to me. If thinking at central banks is starting to shift, why does the bond market not sell a bit more? Especially when you just got this number out there that, oh yeah, there's still a lot of market activity with homes, right? I think we could get to a point here in the next few years where, because of the rising cost of homes, the Federal Reserve has to start raising interest rates, and they'll raise and raise and raise, and they just won't be able to catch up because the prices are rising because there's not enough homes, you know? Some pretty powerful dynamics going on there. Okay. Can the S&P 500 break a new high here? Yeah, it's trying. It's definitely trying. And we're getting into the area where we've seen some selling, though, from 83 to 84. I'm feeling a little sleepy now. Man. I hope I'm not putting you to sleep. Okay, that was a strong bid at 14.5. That was a strong uptick at 14.5. I must be, because there are not too many viewers today. And strong bids at 14 and 13.5. Well, I tell you what, I don't think that this trade has really worked the way that I wanted it to. $6J, definitely, I don't know, man. This is a little interesting. So the $6J is getting hammered here, and the Treasury is not moving with it. So there's usually a very strong correlation there, and today there's not. Also, at the same time, we're seeing the euro move down as well. So it maybe isn't just purely a Japanese yen play. It's maybe just a broader dollar strength that's moving things. How did we do with that? Okay, 1, 2, 3. And then there was the earlier one. 4. This hasn't been very good in the treasuries for me today. It is not, and I've taken buys and sells. It's just very uncooperative. Even though it has been moving, right? Well, It has kind of been moving, but it's been kind of more of a slog. Well, the E-mini was looking pretty good there, but they still haven't broken the high of the session yet. What do you think it means? Chicago PMI data low. new home sales very high. So close, but it's not going. By the way, where's Ace today? No Ace today. He probably completely slept in. Okay, Phil. Today in the 10-year, it seems that the market making isn't necessarily very good because there's been a lot of really strong ticks through. What should you buy if you had money? I don't know. That's for you to decide, dude. See, it's rare that it's ticking up and down and there's only like 712 like that. It's been doing a lot of it ticks through and they try and stack 2000 on it first. So some of the fills kind of end up being kind of nasty. Did you ever find out how we got all those likes on that day? I asked at the end of the stream and suddenly we went, yeah, so I don't know. That's what I was saying earlier, that when I look at, oh, look, there's Ace. So I was just saying, I was like, where's Ace? Did he sleep in? So there was that one video, it was getting a lot of views, right? But then there was the other video that I released that day, and it was getting a lot of views that appeared to be coming from other videos. But then when I look into the data, which videos it's coming from, and the number of impressions that I'm getting from those versus it doesn't look organic to me. So it looks to me like somebody set up some sort of a script to, just give the video views. But you kind of look today. So like today's stream has been relatively quiet. I'm actually surprised. So we have 14 to 15 viewers right now. I was like, and I had to check in with the other rooms. Yeah. I know how it is. But it's a little bit more sparse here today. And I'm just surprised because it's Wednesday. Maybe that has something to do with some of the larger channel changes that I made. I don't know. But so I guess the whole point is when you get a ton of views like that and it's not necessarily organic, it doesn't really translate to anything further, right? It's like if the video gets a lot of impressions and then a lot of people click it, so you have a really high click-through rate, and then people watch a wide proportion of the video, then that's when it starts to really help your channel. And a lot of people subscribe from it too. That's another one, is a lot of people subscribe from it. Are you getting a choppy stream? Well, let me see here. I'm looking at frames missed. There was a few, but that usually happens at the beginning of the stream, so that might not be what it is. I am kind of starting to detect a hint of like the 10-year and the E-mini moving together sort of a thing. This chart, I need to zoom it out a little bit. Yeah. Like since the E-mini has been up, the treasury has been up. Might be all the indicators I have running with freaking view op with all the levels. Well, put $2 in the late jar. I don't think that it would make a huge difference, but I mean, you're on an older computer. Okay, so there's finally a favorable change in the 10-year. I brought donuts. Okay, you are excused. A Boston crime. Maybe people should start calling them that. I tell you what, we have in this room. Look, this room has the best typos. Doesn't it have the best typos? I think so, folks. I think we have the best typos in this room. Mark Wahlberg is on it. What? V-Way is it really was a classic. We need to use that one for a while. Aha. So it is the 30-year. Okay. The 30 years is actually dragging a little. I bet you that between 22 and 23 is probably a pretty high probability one. Yep. And 23 pulls. Not a ton of volume there yet. It still wouldn't be filled. If you kind of wonder about 16, I'm kind of tempted to pull this and put it at 16. Like if that ticked up, I think that this could tick up too. But like, posted a screenshot of MBO in the 10s. Did you put that in the interest rates? Pretty big 2K. Oh, you're talking about it at 16? Oh, hold on. I'm gonna. Yeah. Oh. So hold on a second. In that image, that's not all of the orders. Like there's more than 4 orders there, right? Here, I'll show you what he's talking about. There's more than one of those is broken up into a bunch of different orders or something like that, right? How does that work? The ugly dude says, what is this? This is a screenshot of market by order data from, what platform is that? That doesn't look like Sierra charts to me. Is that Bookmap? I don't know if that's Bookmap. You have to put a filter of greater than 300 or you'll have to... Oh, I see. So those are only orders greater than 300. What if you just put only orders greater than 2? How many would you get? Or rather, well... Actually, what we would need to do is every time that an order is placed or removed, you take the size of that order and see what they are. Typically speaking, based off of the metrics that I can see, and I don't know if the market by order metrics would be any different from just the level 2 changes metrics, but typically speaking, like the vast majority of them will just be 1 or 2 lots. Okay, so the 30-year did finally take 23. You can see the 10-year kind of reaching for 15.5, but it can't quite get there yet. Probably to get over 16, you're going to need to see a bit more volume hitting into 24 in the 30-year. But 243 have already hit into it, so that's a good sign. Too many for a column. Well, I get where you're saying like you only want to have like 5 or 6 on there, huh? Do you really find that useful though? I kind of wonder. Like my whole thing is I really want to do studies with market by order data and I'm really interested in it, but I'm really skeptical that there's an edge in it that's worth, $100 a month. Why would you need to see who the order is from an order is? Well, it doesn't tell you who it is from. I have to say, if you were able to tell who it was from, that would be significant. Like, think about it. Do you want to trade against Goldman Sachs? Right. That would be really change the game up if you could see who it was. There you go. Like looking at everyone's cards at a poker table, I suppose. I wouldn't even think of it like that. Like, okay, so this one, I'm just going to take it as a profitable, even though I do think I could get 16. Because the original risk reward was 2 to 2. So... Goldman Sachs doesn't care if it loses a few ticks, and that could mean your whole account is stop loss. I don't think you understand what I'm saying. When you see 4 sets of 25 contracts and they all move in tandem up and down the DOM, it's something worth viewing. Oh yeah, that's it. Well, those are robots. So like, I wouldn't think of it as like looking at everyone's cards. I would think of it as like, if you're playing poker and somebody raises the bid by a ton, and you've been playing with these guys for years, and you know that this guy is the best player at the table. Do you fold at that point? Or perhaps there's somebody that's just really known for bluffing a lot and they raise a ton. Do you fold? Right? Like, that sort of a thing makes a difference. So if I come over here and I'm looking at all of the orders, and there's an unusual amount of buy orders on the market, and they're all being put out there by Goldman Sachs, then I don't necessarily want to take a trade the opposite direction of Goldman Sachs, right? And this was one of the things in the pits, was that you knew who you were trading against, right? There's all this stuff that happens in the DOM these days where, like, you'll have a big offer put out there and they pull it, or you don't know how reliable it is. And that would be different if you knew who was placing the orders. And because I think that it matters quite significantly if the person that you're trading against is Goldman Sachs versus another retail trader. I don't want to trade against Goldman Sachs. I want to trade against a smaller, weaker player. Lucas says, nice trade there in ZN. Can we agree on every session in treasuries we have nice opportunities to make at least 3 ticks? Well, yeah. There's always an opportunity to make a tick or two. It's just a question of whether your strategy will consistently pull those ticks out with a good enough percentage, right? My hit rate today hasn't been very good. That last one was pretty okay. Okay, sorry, was it 16 that was yeah, it was 16 where there was a ton. They didn't trade the full 7? Okay. Well, it's still 5. So you think Sachs wins all the time with no drawdown? Well, I would what? Okay, defining what is winning for Goldman Sachs is very different from defining what is winning for us, right? When Goldman Sachs is making an order like that, generally speaking, what has happened is somebody like a hedge fund or, some rich guy has come in and he says, I want to buy 1,000 contracts of, the 10-year treasury. Probably it's a lot more than that because somebody's sticking these 2,000s out there. I don't know. Are those 2,000s at every price always there? I don't think that's the case. It's like, it looks to me like somebody has come in and added liquidity into this market, right? Okay. But they'll come in and they say, and it's going to be in the orders of tens of thousands. I want you to buy 60,000 contracts in the 10-year treasury, right? And then they go and they look at the current price and they look at the market and they say, okay, if we buy that many contracts, we're likely to move the market this far. And then that's what they quote them for. And where they make money is from the charge that they give them from the overall thing. And then anything on top of that ends up being more favorable execution than their estimate of how far it will move the market ends up being. Okay. So for Goldman Sachs, they could come in and buy 60,000 and it would move the market up several ticks. And Goldman Sachs, but that could be further than they anticipated, right? So if it moves up more than they anticipated and the average position ends up being higher than they wanted, it could move the instrument up, but they could still lose money, right? Okay, so, but I think that the question still stands. Do you want to trade against Goldman Sachs? Do you want to do market making against Goldman Sachs? I'm not saying that you never want to do that. I'm just saying, wouldn't you like to know if you were or not? Don't you think that would be useful to be able to factor in? And I think that it would be. And I think, and I've talked about this with people that have traded on, like I asked Gary Norton in a tweet once, he said, yeah, like if you could see who you were trading against, it would be different. And the floor trading was a lot more transparent in that respect. So, And I wish that we could see it, but I don't think that it will ever happen. To see who it was. It says you can on Bookmap. I don't think that that's correct. So I've looked at the actual fix spec. Yeah, you can know that one large player. That's true. That's true. On Bookmap, you can see how the orders are split out, and you can see if there's an unusually large order there hiding or something like that. Don't equity level 2 codes do that to some extent? Granted, they're trading for clients under their name too. Yeah, in equities, you do get to see who the market maker was. There's a whole metagame around that I don't really know about, that I don't know much about, but there are situations where you can tell based on which broker changes their quote and stuff what might be going on, but this X, I think we need an order ID. Yeah, so there was a thing on Futures.io. There's this user on Futures.io that started posting a lot. I mean, they started posting a lot, and they were making a lot of really grandiose claims about what they knew. And it was kind of interesting because on one hand, they were showing information that I wouldn't expect a normal retail trader to be posting about. But then interspersed between that stuff, there was a bunch of other things that he was saying that are just objectively false. And so I was almost tempted, and he was posting a lot too. I'm tempted to think that it was like a kid. Like, I was wondering if it's like maybe their parent works for a big Wall Street firm or something, and so that's where they're getting some of that stuff, but they don't completely understand it themselves because they're just 14. Like that's what it seemed like to me. And man, he just posts so much. So one of the claims that he was making was that when you trade on the futures, that they can see what you post, and that if you go through the general gateway, that they can see your order before it hits and do stuff about it. No, that's false. The way that he explained it is like completely wrong. So there is a generalized. So there's the gateways at the CME, and there's a gateway for that specific market, so you can connect it directly into that market, and that's what like a market maker will do. And then there's the other gateways where you connect to that gateway and then it routes the order over to there. So yeah, it does route the order, and there's a situation where, like, say you were directly connected and I was connected through the generalized gateway. I forget what the words are that they use, but there's acronyms for them. Then your order would likely come in ahead of mine in the queue. So there are some weird situations like that. But he was saying stuff like that. Okay. So, but one of the things that he said is that they can see what FXCM it's from. Okay. So I went through the entire fix spec of all of the orders that come through those gateways on the CME. Okay. And there is no property in there that would tell you anything about the person that's buying or selling it. There's some information that would tell you about clearing, but it's information that you put on your order that does not get reported back in the fills to that gets market dated, that gets reported back out to everybody else. So from everything that I could see, and I did my best to look through it because I was like, I'm not going to say something unless I'm like really sure about it, right? But I went through it, and it seemed to me that what he was saying was objectively false. So I called him out on it, and like the thread died, and he never said anything. So I was like, okay, but I am pretty certain, because I've done some. I spent like a whole afternoon trying to prove myself wrong here on this. I'm pretty sure that they cannot see who is sending the order. Mike says it is useful and important to know your counterparty to a trade. Some futures exchanges do show that IBOVESPA, Ibovespa, for example, B3 exchange in Brazil. Yeah, it's possible. That's where I say there are certain things about the way that the data is structured at the CME that I think is a little bit suspect. It would be nice if we could see an ID for the counterparty that we're trading. It doesn't have to give me their name or anything else like that, but I think that I should be able to go back through all of history and see every trade that account has ever made and look at it. I think that would be interesting. At the very least. Okay. But I also, the one that really irks me is why don't they give exchange timestamps on all of the data that's sent? If there is fills being sent back to you or sorry, like order matches being sent out to the market, why is the time that match occurred on the exchange timestamped and sent out to everybody so that we can reconstruct the trade? Instead, they just send us the orders and we kind of reconstruct it, and the timings could be off. And so there's certain things that we can't infer about trades because of that, right? Is just that one I think is a little suspect. Because I can't think of a good reason that you wouldn't include that. The only person who makes money every time you pull the trigger is your broker? Can't argue with that one. It makes me interested in the broker business. Kind of like what is involved in the day-to-day of working for a broker. Would that be something that I would enjoy? Well, good uptick there at 15.5 again. I was kind of wondering if I wanted to try it at 15 again. Probably we don't have enough time for that. There's some people. I gave them a message, I told them something. And I just don't think that what I was saying. There, I didn't send it to him there. No, that one's it was reporting a spammer. I don't think you understand what I was saying about what to do about it. Watch The Wolf of Wall Street and add more strippers and drugs is probably no. I don't think it's like that at all. It seems to me that it's like people being really mad and don't know what they're doing and trying your best to fix their mistakes is probably what it's like. That's my guess. Trade Trotter says start your own TST model seems to I probably could. All right, so let's see here. So the issue with these combines is that, well, twofold, really, right, that we complain about. One is that they primarily make their money from people failing the combine, right? Because their parameters are just a little bit unrealistic. The other side of it, though, is people that do get funded tend to blow out later. So, like, even for the people that get funded, there's like a limited amount that you make out of them before their strategy stops working. So, if I was going to make a combine, I would want it to be one that fixes those issues. And here's the thing, I don't know how you do that with those rules. You know, if I was going to fund people, I would want to do it the way that Futures Trader 71 says that he does, where if he sees specific people that seem to be, you know, have stuff, then you fund them and you have a much more direct relationship with them. Does your tooth hurt? No, why would my tooth hurt? No, my teeth are fine. I'm assuming your funding partner puts risk parameters in place and you work within those confines. I don't know. I guess the point is that I think that there needs to be some innovation done in the combine space for me to want to be like directly associated with it like that. And I'm not entirely sure what the change should be. I would be... You were grabbing your teeth like, no, that's fine. That was just, oops, I almost pushed my water over. That was just like idle. That was like ADHD behavior. Helios, I think, is the funder behind most of them. Really? It funds both of them? I don't know. Well, anyways, you know, if I was going to do a service like that, I think that I would be much more. There's something else that kind of sucks, right? I think that there's something about the regulations that should probably change. So if you are a broker, a futures broker, there's like significant limitations on what you can do, right? So one of the biggest limitations is that you can't do introducing, right? So in the UK they have introducer brokers, right? So you can be trading for a broker and then you can refer your friend to that broker and you'll get a commission off of their trading or whatever the deal is, right? That's not legal in the United States for futures. So, because of those limitations, there's lots of things that the futures brokers can't do. So, for instance, one of the recommendations that I made to them was like, you know, something that I think would, if you're a broker and you're trying to get more people to come in, how do you differentiate yourself? And I was saying, well, I think that one of the best ways to differentiate yourself would be to give your traders better research. Right? Pay for like research, pay for a news squawk, and partner with these guys to give your customers this stuff for free or something along those lines, right? Well, they can't do any of that. Like they're just not allowed to do anything like that, make any kind of recommendations or anything, right? Because I think that an ideal service would be like you pay $100 a month and you get a news squawk and research and a room that gives you all this stuff and it's all tied into your brokers. And, you know, the broker, I think that the way that futures trading is set up, the broker does have an incentive in you being successful. They do. It's just that like, there's nothing that they really can do to help you be successful. You know what I mean? Like there's really not a lot they can do about it. The best that they can do is like what EdgeClear does, where you set the things up so that you at least try to attract a higher quality crowd, and hopefully that means that you find more profitable people. But does that really help? I don't know if it actually does. What would you trust? Well, I wouldn't want it to be from the broker. I would want it to be from a partner. And in the futures market, maybe. Kind of depend on the kind of the recommendations that they were making, but wouldn't trust equity recommendations from my broker. But that's the funny thing, is that the equities brokers are allowed to give you all sorts of research, right? Although I haven't found the research that I get from like my Fidelity account to be super useful either. So are they going to go into 17 now? I really think that trade. Remember, I took it off because I was like, well, it's supposed to be 2-2. But I was kind of getting an inkling that they were at least going to go for that one price. Was it at 15? Let me see. Yeah, it was at 14.5. I took it at 14.5 and took it off at 15.5. I thought maybe I could do 16 and see what happens. The way that it's trading, if I was doing what I normally would do, I think I probably would have pulled it a couple of these by now. Came across a reading of 5 authors who have their application strategies posted to Bloomberg Terminal and definitely see appeal to that help at $25K a year. Yeah. Oh man, the data that you get from a Bloomberg Terminal is definitely useful. Like, so think of it just here in the treasuries, okay? If you're trading the treasuries, think that most of us that try and scalp treasuries, that we have like the 5, the 10, and the 30 up, right? And then maybe you have the 2-year on like a watch list or something like that, right? Okay. And then you look at how they're behaving and you compare them against each other to see discrepancies and so forth, and where the yield curve is going, right? Well, what if you could go and you could look at every bond QSIP in the bond market? Because that's what you can do on a Bloomberg Terminal. And you can look at all of them and you can say, based on all of these that have moved, what should the price of the 10-year be based on this other bond and the differences between the two of them, and try to detect price anomalies that way, right? Okay, so now you'll have like hundreds of things that you can compare against to try and find a price discrepancy in the treasury, right? Yeah. Is there valuable information in there? Yeah, there's a reason that it costs so much. I think it was a good trade. It started back ticking and you took profits, so discipline was there too. Well, yeah, that is because I did kind of pull it, right? But the thing is that part of the reason why I did that was because I felt like I was giving myself a little bit of leeway and not doing the hyper disciplined thing. And I was kind of starting to regret it. And so I said, no, we're just going to do what we're supposed to, which is take 2 ticks, 1 or 2 ticks, depending on the market. It's been too hard to do 1 tick. I've been finding, but 2 ticks has been a little bit more reliable if I'm actually in good action. In fact, so remember earlier I was saying, well, I have like 4 bad ones, but there was one that did go 2 ticks in my favor. So, and I didn't take the profit. And I don't remember, because I was trying to average in. So if I hadn't been thinking around and averaging in, that would be 2 and 2 right now. But those earlier trades in context were probably just noise. Whereas that last one, I think we had a little bit better of a setup. I love taking money from guys who pay $25K a year from Bloomberg Terminal with my $199 war rig. Well, probably you're not taking money from those people. Probably you're taking money from the other people that have the same rig as you. Wait, how is 1 tick harder than 2? You mean because of what you are risking? Yeah, so here's what keeps happening is I'll get in at 14.5 on limit. Let's say we're buying. So I get in at 14.5 on limit, and then I want it to go to 15, right? But before it goes into 15, it will tick into 14. I get out, and then it will come up and it will go through those, right? So the place where I can get the fill, the quick fill, it's going to go down through me first, and then it's going to come up. Whereas if I do 2 ticks, it tends to come down, so I'll have 1 adverse tick, and then it goes up, and it's fine. So I have a little bit more leeway with 2, but with 2, I need to have a little bit more reason that it's going to go somewhere as well, right? It's like I end up being like that one I was in for 13 minutes, right? Some of these I've been in for more than 10 minutes, actually almost all of them today. I would much rather, only be in for a few seconds. So, I don't know. I think the other issue though, Lucas, is from a risk reward perspective, especially if I am using a volume stop, and I really feel like you have to have some sort of a volume stop for this sort of a thing to work out. The chances of it going through you and your stop not getting hit and then them continuing through until you get to like your emergency stop or something like that, like there's a real problem there. And so for that reason alone, I think that 2 ticks is probably more prudent than 1 tick on the 10-year. But sometimes the 1 tick just like really worked really well. So I don't know. I think it needs to be contextual. But I don't think that I am picking up the particular inefficiencies and everything else about the market well enough to really get my win rate to where I would feel comfortable trading it live, I'm just not there. Maybe there are some things that we could write to try and like empirically tease that out better. Because there's many times where I take it and then I just never get anything out of it, and I'm like, that one was dumb, and I come back and I think about it and I'm like, well, I must have thought I was seeing something, but it really wasn't the kind of inefficiency that I'm looking for. It was just random, Almost the top of the hour. Yeah, let's see here. What would we call? So we should say something about the housing numbers. Oh yeah, I forgot about oil. What's oil been doing? It hasn't moved as much as you would think, given the numbers that are out today. The 6J, by the way, continues to fall. This is very curious that we're getting the bid that we are in the Treasury with what the 6J is doing. Robinhood pays $70 million to settle allegations of manipulation. Oh, that's interesting. So let's call today Blowout pending home sales. Blowout pending home sales. End of month. Yeah, we will save that. Then after we close it, we'll make the video unlisted again. A farmer who keeps his farm going by trading out. Maybe if you were trading soybeans or something, Ace. Yes, it is time for me to get going. So, Lucas says, "Got you, Seth. We'll look at what you said about the 2 ticks." Yeah, I don't know. I think it's a trade that we got to keep working on, right? But it does look possible. It definitely looks doable. And I was always super skeptical about like, can you really get like these high win rates with the strategy like that? It looks to me like you can, but it's hard, and I think it would require a lot more work. So, but we'll keep working on it. Okay, stay profitable, friends.